campaigns. Justdial reported numbers for the third quarter. Ramkumar CFO is CFO of the company. And I just want to start by asking you, Mr. Krishnamchari, about the top line growth. 28% growth year on year. Can you just break that down for us? What was it sort of led by?
Yeah, definitely. We have taken a number of initiatives beginning of the year in terms of expanding our sales force, expanding our footprint, supported by the ecosystem of large number of consumers going online, and communicating and educating all these small and medium enterprises. There's a better platform for them to get discovered with the large number of consumers going online. So we have been able to do that, and we continue doing that to educate these small and medium businesses so that they can be discovered and now they can be transacted as well. So these are initiatives which will continue, which will only intensify. The result of all that is the overall revenue growth, and that has come mainly from the both the top 11 as well as the next Tier 2, Tier 3 cities. So the growth in the next 25 cities, they have been growing faster. We have been expanding, deploying more and more of our sales force in these lower Tier 2, Tier 3 locations. So overall, our efforts of educating these small businesses, reaching out to them, communicating to them about Justdial, plus the ecosystem supporting us in terms of more number of consumers online, going online with cheaper smartphone and data plans. So things are quite exciting for us.
Can you give us the growth numbers for two things? One in campaigns, number of campaigns run, and second is listings.
So the net campaigns grew by about 17,000 campaigns to about 13,000 odd, 12,000 odd, and the overall database grew to about 14.7 million. So if you look at last year to this year, we've already grown almost about 3 million listings during the year. So we had a big initiative in Q1, and then we sort of consolidated and slowed down. So we continue to believe that we will have the strategy of pushing the data in a particular quarter or two and then stabilizing it. So these are things that we continue to do. We are quite confident that we will continue to grow healthily both the paid campaigns as well as the overall database.
EBITDA margins have rebounded quite nicely in this quarter. Can you tell us where did you save on costs, and how did you treat ESOP expenses in the quarter?
Sure. So the EBITDA margin is 32% is after accounting for the ESOP expense. ESOP expense this quarter was higher than Q2 because we granted, we had a pool of about 700,000. In Q2 we granted about 350. We granted additional 240 in this quarter. So despite that, with the increased ESOP expense, we have delivered this margin. What we are trying to say is, look, we can deliver higher margin if we need, but then the focus is on growth, investment in the right areas. We are still in the investment mode. We are still in the growth mode. We are investing and plowing back the incremental margin inherent in the business model, the operating leverage inherent in the business model, and the incremental margin, which is an outcome of that. We are deploying into Search Plus initiatives. We'll continue doing that. I reiterate that year on year we will be able to sort of the incremental margin for the next 1 year or so will flow back. We'll have a stable margin, maybe a small uptick in 100 basis point uptick in the overall margin. But the focus is more on growth and investing in the right area, sales and technology, rather than growing the margin. But then, this is something which we believe it's a demonstration of the operating leverage in the business and what perhaps we can achieve in a steady state growth rate.
Broadly, do you expect margins to remain volatile as they have been in the last couple of quarters, and talking about from here?
Look, margin will be subject to what the ad spend that we do from quarter on quarter. As I mentioned, our big one-time ad spend is yet to kick in. If you exclude the ad time spend, the one-time spend, the normal margin, normal expenses that we incurred during the quarter, we believe that margins will be stable.
Mr. Krishnamchari, other income was lower year on year. I mean, it was actually lower compared to what you usually report as well. Can you talk about that? What led to it?
Look, as you know, the government of India had in the July budget came up with the policy that any instruments which is held for less than 3 years will be termed as short term, all these debt instruments. So rather than booking profit and paying 33% tax, we are saying that we are carrying it over, and as and when it is appropriate, we will book profit. So it is more of deferment of profit rather than anything. Let me tell you, with the softness in inflation and the reduction in the overall interest rates, the GSEC coming down to about 7.5%, we have seen uptick in your overall value of our investment and debt portfolio. So we are sitting in about unrealized gain of about 60 odd plus crore, or maybe 75% crore, 75 crore of unrealized gain. So all I'm trying to tell is, look, investment, the profitability of the other income is a function of when we book profit. Right now, there's a far more efficient way of booking profit, and we'll explore this and continue to book only if and only we feel that it is efficient to book profit.
You know, the number of employees that you're adding, if you look at the 9-month period so far, is lower compared to the same period last year. Just curious to understand, since you're saying that you're in a high capex mode, you're expanding, investing, why is this number actually lower year on year?
No, exactly. So we are this Q3, we added about 300 odd plus. In Q4, we are continuing to expand. By the end of this year, you will be back to the overall growth that we saw last year.
On Search Plus, Mr. Krishnamchari, last question before I wrap up. What's the update? Are you as optimistic as you were before?
Absolutely. We continue to be quite excited by the way the Search Plus is turning out to be. We've already launched these 23 products are already live on our platform. It's only a question of communicating with the users and consumers. So far, we are known as a search company. Soon, consumers will discover there's a more convenient, efficient, better, and faster way of doing things. In the process, they will save some money as well. So it's our job to communicate to the user that there's a better platform to search and transact. Single platform where they can transact for multiple things rather than going to multiple places to do multiple things. And so that's something which we'll start communicating perhaps later this quarter or Q1 of next year. But we are very, very excited about the prospects of this Search Plus and the value that it can deliver to both our consumers and our vendors.
Thanks very much. Good luck, Mr. Krishnamchari. Thanks for joining us today.